Welcome in, everyone. This is our weekly flow recap. This flow is from the week of 5/5/2025 to 5/9/2025. As always, we're going to look at the full range of the contract, look at what stuck out on the flow, kind of look at the flow feed, kind of just do our normal stuff that we do in our typical videos. Good video for those that are trying to kind of learn unusual whales, kind of see what sticks out on the flow, what to look for. And before I get started, I like to show everybody everything I post is in real time. I don't edit my posts. I don't take posts from other Discords or anything. Everything is my findings. I do the research on everything. Everything is done in real time. Everything is posted real time. So yeah, let's get started here. So first up, we had the 718 BP32 calls. And let's take a peek here. I'm going to come back to Monday here. We're going to look at it on the day that it came in and kind of pop out to Friday and look at the full move on the week. So here is our move, or here's our flow that came in on Monday. And you can see we had 9,197 contracts traded that day against 1,500. This whale came in with 3,600, roughly 3,600 here, showing us that it's an opening trade. Can see at the time our net call premium was spiked as well. And let's take a look at the flow. And you can also see that kind of call volume picked up throughout the day there as well too. When we look at our raw flow, come in here, can see when that flow, I like to look at the flow around it as well too, just to kind of see what's going on ahead of it. And this is pretty close to the timing, so that is key there as well. So you see that IV pop when we get that repeated hits alert. Little wider bid-ask spread here, so that spot is being filled at the ask. Again, just following this up. Just keep an eye on that IV and that fill price, the spot price. So we can see this coming up here. IV's staying up. It's not decreasing or anything. That spot's staying at the ask. So a good sign there. And then do have some bid side action after. Not a super big deal. It's not a ton of volume. And you even see that IV kind of increase there anyway. So if you were to incorporate that, that would match your analysis. So that flow looking reads as a buy. So now when we pop out here, you can see this flow did kind of move up the same day as well, though, hitting 54 for a high. But let's move this out to Friday here, and then we'll see the full week move. So I'm just kind of grading these on a week move. So I post a flow recap. This is kind of for newer people. I post a flow recap every week. Like last week, usually our Friday plays, they're more than likely kind of flat, just because it's coming in at the end of the week and you have the weekend and all that. So you can always go back and look at the previous videos and kind of look at that last part of the video where I hit on Friday. A lot of that flow does move the next week, so keep that in mind, but I'm only updating this every week, because if I updated all the flow every week, it would be a very long video. So back to BP here. So again, there was our entry there. You can see we moved up same day. Did kind of drop a little bit here, and you can see majority of that volume did carry over. Well, could have took some out there at the bid, but you can see we hit our high of the week here on Friday. These hit 70, so they hit from that original 40 cents per contract to 70 cents per contract. That's a 75% move there. So up next here, we had SPY. We had some SPY puts that expired yesterday. This video is being filmed on Saturday. So let's go back here to Monday 5/5. So again, very clear picture here. At the time, net premiums were pretty bid side-ish. Had that little spike towards the end of the day. Come down here, look at the volume to open interest. Again, can tell it's an opening trade. Here is 2,800 contracts at 235. And you can always, if you see some open interest, I always kind of like to go back 7 days just to kind of see if make sure it's not one big giant whale maybe passing contracts on. So a good thing to do that as well there. So here's your day. So actually could have got a nice little smaller discount on this one. This one did kind of drop a little bit on the day. But when we zoom out here, to Friday. So here's your entry here on the 5th at that 236. We actually had a gap down here on SPY on the 6th. So these did hit, I believe, the high here on 343 on the 6th. Let me just pop this to the 6th to make it a little more readable. So again, you can see that here. This was our entry. SPY gap down. Showing 328 there for a high. It does have, I have 343. So that'd be the spread there with the IV pop and all that. We see this here. And again, when we looked at that initial volume here. Oh, I'm going to have to go back to, nope, here we go. Computer's just being a little slow here. It's going to be kind of goofy because it's that time is expired. So we're going to see if it's going to allow me. I'm going to have to go back here 1 second. Sometimes the older flow, and when it's expired, it can be a little tough to look at there. Okay, we're going to try one more, and then we're going to move on here. Sorry about that. See if I get a pop here. And if this doesn't work, we're going to move on. Yep, it's going to be a little odd just because it's an expired flow. But again, here was your entry, 236. Popped and hit that 3, where were we? Hit that 343 here on the 6th. So those did actually make a 45% move there. So let's go on here to GME. So this was a, I consider anything GameStop kind of a lotto play. So let's look at the flow still just for fun. Again, you can see when that large size came in. We came in at the ask. IV popped when that came in. Again, a little different with GameStop just because it's more meme related. And again, you can see our movement here. Moved up the same day there, hit about, probably get about 15% out of that, hit about 121 there. But we hit our high of the week here on Friday. We hit 172. So those ran from that 104 original entry to 172. That is a 65.38% return. And we looked at that. We looked at the flow. Let's go look at FCX. So again, here's our flow for Monday. We look at the 5th. And you can also pop this. I kind of like to look at that full range of that net premium. I do kind of value the flow a little more than the net premium. That premiums can get kind of changed around a little bit just if contracts are sold at the bid, sold at the ask. So I do kind of weigh flow over net premium a little bit, but we look at the 5th here. You can see these came in at 11:30 on Central Time. So we come here, we look at 11:30. You can see we had that big spike in that net put premium, so good sign there. Again, that net call premium was up too, but kind of some other strategies you can go about using this with this, but not going to cover that in this video. But here's your FCX. We look at the raw flow here. Let me pop this down. So let's see if it's going to let me go back a page. Nope. Okay. 1 second here. Yeah, just when it's almost a week old, it gets a little funky sometimes. But you can see we're coming in right here at the spots coming in at the ask. We're coming in as sweeps. These are sweeping orders. Again, IV staying elevated. Spot staying the same, coming in at the ask. Reads as a buy. And again, these did kind of run a little bit the same day too. So from that 73 up to 80. But we hit our high of the week here on the 8th at 88. So these ran from, actually, on the 7th here, sorry. We hit a high of 105. So from that 73 to 105, that's a 43.84% there. And again, see most of that volume carrying over into open interest. Good sign there. And for those that have been tuning into the flow recaps, you always notice this pattern. Everything matches. Everything matches. If it doesn't match, I just move on to the next thing. Newer people watching, excuse me. Newer people watching the video, you'll notice just the trend. You have the IV increasing or staying elevated, that spot price coming in at the ask, or spot price increasing. And we'll have some good examples here actually as put sells here as to the opposite of buying. You just notice everything is the same. You have to be patient with flow. You don't need to take every single piece of flow that comes in. You look for the quality flow. You're more, and I learned this part from Snorlax, you're more finding what's wrong with the flow than finding good flow. If you see that good flow, then there's nothing wrong with it. So, I mean, it's something that would be actionable then. So, moving on here, Apple, the 523-200 calls. Again, 13 days on these. So, this one, a little different. We came in here, we had 2,200 contracts, 614 a contract, 1.3 million. These contracts, and it looks like, because we came in on the 5th here, majority of that volume still there. This chain is going to get a lot of activity, so it's going to be hard to tell if this whale exits all that just with all the volume and all that. But these contracts are running at 432 right now, so this whale, if they're still in, they're down 29% right there. So we won't spend too much time on that. So this next one, the IWMs, this will be a really good play as an example here. This will be a good example of a whale passing contracts off to somebody else and using that volume and open interest to determine that. So let's look at our first piece of flow that came in here. So these were the 6/6/215 calls, 20,000 contracts coming in at 105 a call, or 105 a contract for 2.1 million. So interesting here, you see 105 kind of run a little bit, barely up. This whale, so we're going to pay attention here. We're going to actually look at the volume and open interest first. So again, we had 20,000 contracts. You can see majority of that carries over. So we know that whale swung those contracts into 5/6. Now you can see we had 20,000 contracts come in here at the bid at 68 cents. So when we look at that bid side flow, and actually it's going to be kind of goofy here. So we're just going to I want to pop back out to the main one. It's not, because this isn't all multi-leg, it's just that chain's going to be 8% multi-leg. Easier to show with the numbers here. So we had that 20,000 contracts traded here on the 6th. So we know they didn't close them fully. We know they didn't add to the position. Because when we look at the 7th here, you can see we only had 962 contracts come off that open interest. So this whale passed these contracts off to somebody else. So that's just your basic math in there. Now, if they would have added 20,000 contracts, that open interest would have been 40,000 on the day. If they closed them, it would have been about 350, give or take. You'd see that 20,000 come off the open interest. So this whale passed them on. But this flow, interesting, because from that original 105 entry, these did hit 123 here on the 8th. So that whale did miss out on some profits. The contracts would have moved from 105 to 123. That's a 17% gain. I like to look at least for about 10-15%. If I'm up 10%, and again, for people that have watched my videos before, I always suggest at least putting on a stop at break even. 10% is a good trade. You see a lot of people posting 400, 500% returns. That's not always very typical. You can get up to that if you adjust your stops up properly and have proper exit strategies. You can reach those, but the more realistic, I like to tell people, aim for 15-20% to start out. If you're up 10%, great, put a stop on for break even, and then start adjusting up your stop every maybe 5% or so. That way you capture the move, but you secure profits as well, and you don't let a green trade go red. Because there are a lot of whales that will be up 100%, and then they're red, which we'll have some examples in here of as well. But these IWMs did run from that 105 to 123. It's 17% there. So HIMS, this one was a little more difficult. This was post-earnings. So this was on the 6th here. Let's go over to the 6th. So a little tougher on this one when you look at that flow, because it's very volatile. You can see where in the big chunks of flow come in here. You can see that IV increase. You're coming in at the ask. That this one's a little more, I don't want to say towards the mid, but you see that IV increase when these large pieces of volume are coming in. So let's come out here. So now something like this, you know they're shorter term. They're looking for a shorter term move. So this whale does look to still be in. HIMS is very volatile right now, but did make a nice little move here if you would have got a good fill on the spread. So 205 would have been your entry here. These did run up to 260 very quickly. I mean, within about 10 minutes here, and you would have had time to throw up a stop here and start securing some profits before you got back down to that 201. So I mean, from that time frame of 8:55 to 9, I mean, you popped here, you hit that high at 9 and just slowly started to come down. 905, 9010, 910, 915, then kind of that 915 to 920. So you would have had 20 minutes to put a stop on there, especially after a big pop like that. So those technically would have ran from that 201 to 259. So that's a 28% quick pop move there. So again, should always, especially on shorter term flow like this, 6 days out, they're probably looking for a faster move here. But see what happens with this, because this whale would be down with a week on it. So up next, we have the 523 United Airlines 74 puts. So again, here is our whale. So we're going to actually come back here to the 6th, because this whale, very interesting. We look at 5-6 here, so we're going to pay attention to some of this volume open interest. So we had 1,100 contracts traded here, plus another 600. So again, there's your 1,700 contracts traded. So after our initial entry was 340, these actually ran and hit 390 the same day. So those moving from that 340 to 390, that's about 14% on there. So volume looks to still be there with some time on there. And again, looking at that net premium too, you see that net put premium coming up. But when we come out here, pop this to Friday. So yeah, you can see that volume here. So it's kind of going to be a little tough here to know if this is the original whale still, because this could have been your original whale buying some contracts here, buying some more here, and then potentially selling them all there. Because you can see if you put this candle on top of that, could be an ask side exit or passing them on to somebody else. Don't fully know, but those did make a nice little 14.71% move there. I would probably assume this whale's still in though. But again, those contracts 340 to that 390 here, that same day move. All right, up next we have the 516 BKR 37 calls. Get another nice move on these. These coming in on the 6th. Can see this right here. 2,000 contracts at 85 cents a contract, 171K. These hit a high of 105 here on the 8th. Can see kind of flat for most of the day. Then we ran up that next day. So from that 85 to 105 for a high, that gives us a, do my math here, 23.53% move there. Looks like most of that's still in. So again, this is what I was saying earlier. If you're up, you should be adjusting up stops, because this whale obviously, I mean, had a little drawdown here and then a pop. if you're up 23%, now this whale's back to being red. So from that 85 all the way up to that 105 to 55. Even if BKR pops this week, you should be adjusting up stops and securing these profits. If you want to re-enter because you see that whale still in, at least do it with recycled profits. That's the way I look at it. You have to be taking profits in these markets, especially these conditions where headlines are moving everything. But again, this is kind of what I was saying about how they'll let gains disappear. And you don't know the full story behind what each whale is doing. Could be, you never know what they're doing. You obviously don't. But, so that one did make a nice move there. 85 to 105 for 23.53%. And I'm going to, okay, so the Boston Scientific 516-100 puts, these are pretty much flat right now. Opened at 55, 2,000 contracts, 110K. Closed at 55. There, no return on there, flat. So up next, we'll have two good examples of put sells next. So we're going to look at these CCJs. And with this one, I'll have to show the contract on Webull because this contract didn't get updated. And I'll show you what I mean here in a second. So we're going to first look at the original entry here. I'm going to pop this back 3 days. So here's your whale. 8,812 contracts at 41 cents a fill for 361K. We look at that flow when it comes in. So now when you read sells, now again, this is just kind of, it's not going to work 100% of the time. This is just little steps that you do to kind of look at things. So again, you can see little wider bid ask here. Got some flow coming in here at the bid side here. You're looking, so it's the opposite of buying calls, buying puts. You're looking for that IV to decrease and that spot to decrease. So you can see you're coming in pretty much at the bid there. That IV drops, reads as a sell to me. When you look at this, so this is what I was saying, you can't really go off this right now because there's not really anything trading. So I'm popping up Webull here to show. So it was the 613.40 put at 41 cents a contract. These are now running, so the 613.40 puts at 23 for the, we're going to go on the ask side, go on the higher end. So that whale would have collected 43% of that premium. So now when you're selling puts or selling calls, the idea, so I tell people if you're selling calls, it is neutral to bearish because that stock can just stay flat, and as long as theta is eating those contracts away, that whale's collecting premium. And again, for puts, if like this one, they want that stock to again stay flat or go up, so they're trying to collect that premium, that theta decay essentially. So that whale collecting from the 41 cents selling the contracts, running at that 23, that whale's collected 43% of that premium. And when we get to the Google one, it'll be a better example because that one actually has a little more volume on it. So up next, we have Nike. Again, here was our entry, 3,600 contracts at 81 cents a contract, 299,000 premium. Again, you can see kind of choppy throughout the day. When we look at the 7th here, you can see about half of that volume kind of carrying over, so majority of that volume carrying over here. These hit the high here on the 8th, so next day they ran the next day. These running from that 82 to 125 for 52.44%. And let's move on to the Google sells here. So again, now this one's going to be a little bit better visual example. So again, we're looking at the Google put sells. We're going to look at the flow here. So again, you can see right when that flow starts to come in, IV decreases. You're coming in right at the bid. Coming in at the bid. That IV's down. You can see that IV kind of pop a little bit here. Nothing super outrageous because it pops and then kind of drops, and that's on the smaller volume. And then you can see as that volume continues to come in, that IV is decreasing. It's a repeat. It hits descending fill, so you can see that fill pretty much kind of decreasing in here a little bit in a couple spots. So that IV again decreases pretty much towards the end there. You can see we did have a small little pop here to the downside on Google on the day, but these contracts are now sitting at 62 cents a contract, so that whale's collected about 52% of that premium there. So good move for that whale. And let's move on here next. So I'm going to kind of steamroll through the rest of this here. So Pepsi, this was our original entry 1. These came up and hit 119 a couple times on the day. Ended up hitting the high here on the 8th at 134. So those dollar per contract to $1.34 a contract, 34% on those. Nvidia, this is one of our losers for the week. So this whale coming in on the 7th. I'm going to pop this back to the 7th to show everybody. So again, you can see these ask side candles coming in here, bid side candle here. You can see all that volume on the 7th. That only 3,400 contracts carrying over, so that whale actually closed these at a loss of 267, 268. So that whale closed those at a 32% loss. Up next we have the 523.15 bull puts. So here we are. So 188 on these. Looks like they closed about 157. So that whale is down about, let's see, about 21% here with 2 weeks on there. So something to keep an eye on there. And let's go on to the next one. So we have another FCX here, the 523.40 call. Here was our original entry. 2,500 contracts at 41 cents a contract. Big pop here. We actually hit our high of 66 here yesterday on Friday. So those moving from 41 to 66, 60.98% there. Tesla calls. So this one I do want to spend a little time on because this is an example of not all bid side flow is exiting side flow. So we had 53,000 contracts. So I do have a post on this on X that I did post with kind of the more math breakdown. So we had about 40,000 contracts between these big spikes here. So you can see most of that carrying over. These did make a small move up on the same day, so you could see some flow coming out in there, maybe potentially from that whale. But you can see most of that carrying over. Now, if this was a bid side candle, we wouldn't be seeing all that volume carry over. So we had a big pop. So average on the Teslas was 1380. These hit 2587 on the day. That's a 60 or 87.46 return on there. And you can see some ask and bid side volume coming in here. You're going to have to check that on Monday to see how much of this carries over, just to kind of get that math down because it won't update till Monday. Amazon, this is another one that's kind of down right now. It's about 54% multi-leg there. But 184 they came in. They hit about 285, not a significant return. Contracts are about, let's see, what did we close at yesterday? 113-ish. So that whale, I mean, down about 39% on those with 2 weeks to go. A lot can happen in 2 weeks, but it's in about 54% multi-leg, so probably pass on that. No. Tech, we have the 523.35 calls. Nice smooth move on these ones. Very easy one to see. That volume, can tell it's an opening trade. 1,800 contracts, $1.20 a contract, 216. Again, that volume carrying over into that open interest. 120 hitting 181 on the day yesterday, 50% move on there. We just look at that raw flow here. So now this one says it's a descending flow, so this is why you always kind of got to look at that raw flow, because I'd like to see where that part is descending here. And might be a little bit towards the beginning. Let's see. So this is where it's showing you that descending flow here. You got 12 contracts coming in at 117, so it's going to mark it as descending flow. And then you have that right here too, from that 120 to 119. So paying attention to that raw flow feet is really big. Oh, sorry, I got the hiccups coming in. So smooth move on those. Again, 120 to 181, that's a 50.83% move. So Queb, the 516, 34.5 calls. So pay attention to this. That spot price here is at the 48. This is above the ask. So when we come here, so this one made a quick day and the quick move. So this is why I always tell people you should be adjusting up stops and securing profit. If it's only for a day and it's a quick day trade, that's fine. That's fine. You know it's a short-term contract. We look at the raw flow here. And I'll show you where it really sticks out. So this is why I like looking at the raw flow. IV stays elevated there, coming in at the ask. Now when you see the two large sizes come here, big spikes in the IV, these are coming in above the ask. Very unusual flow there. And these did, I mean, pop from that 48, they hit 55 here at the max, 55 towards close. I mean, enough time to secure something. It's only a 14.5 or 14.58% move, but still should be securing profits on something like that, especially in the volatile market. All right, SPY call. So this one, so 6,000 contracts traded here on the 8th. Here was our flow, 4,000 contracts, 2.84 per fill for 1.1 million. Again, can see majority of that carrying over. Have to see what happens next week. I mean, we got 10 days on these, but they're running about 157. So that whale's down 44% with a little time on them still. Have to see what happens. Then we have to Friday here. So we have the 516, 146 FSL hour calls. So these making a nice intraday move here. Here's our flow. 1,000 contracts at 249, 253,000 total premium. Actually hit 464 for a high. That's an 86.35% intraday move there. And we had Nike make a, let's see what Nike did here. Let's see, Nike. So our flow here, the Nike 523.59 calls. Looks like we're closing at about 155 here. So that whale opening, let's see, okay, 937 contracts, 170, 159K, closed at 154 here. So 154, 155, that whale's down 8% with 13 days ago. So that's kind of our flow. That is our flow recap for the week. Again, if you're interested in getting all these alerts, and I'd like to show everybody again that made it through the video. Again, everything's posted in real time. I don't edit my posts. Everything is pulled from the Unusual Whales platform. I post everything in my bid side contract, so you can see our bid side flow from the week. ETF flows in here. I will always post the contract, the ticker, volume, open interest, average. So everything is there for you. But that's all I got. If you're also interested in trying Unusual Whales, I do have a discount code that will be in the description below. If you're interested in joining Stock Hub to get these premium alerts, a lot of economic data, earnings data, tons of other market data, feel free to hop in. It's $19 a month, less than $1 a day, especially for how much stuff is put into it. But that's all I got for this week. Have a great weekend, everyone.